Hi guys, today is June 25th, 2020, and futures are beaming in red after weekly jobless claims came in at 1.48 million versus 1.35 million expected. And also states started to report the second wave of the virus. So a lot of people are running scared, but it also shows, I thought we were just too high, and stocks needed to come down a little bit. Because we were not in overbought territory, but we were pushing it a little bit, and we were just too high. A lot of froth out there. So let's jump to SPY ETF for S&P 500, and I still have these lines, okay, support lines, and as long as we stay above those lines, like $295 range, and we will be okay. I think we will be okay. So a lot of choppy trading, but in general I think as long as we stay above these levels, we should be okay. But stocks are opening in red this morning, and we'll see what happens. So let's jump to corporate news. And by the way, if you want to see my trades and what I'm trading on everyday basis, you can check out the Patreon link in the description. Okay, so let's jump to Apple. So Apple had a number of announcements at the Worldwide Developers Conference, and it unveiled its new operating system for the iPhone, and unveiled a new operating system for its computers, for the iMac, and said it will ditch the Intel chips, and pretty much a reputation hit for the Intel. It's not going to be a big financial hit, but a reputation hit for Intel. So Apple said that they will develop their own chips, and but at the same time they also said that they will be reclosing the stores that they opened. For example, they are reclosing a number of stores in the Houston area. So in general, Apple was trading very high. I mean, the high at $372. I mean, very, very high. I mean, it's trading like 27, 28 times earnings, and I think it needs to come down a little bit to buy it, in my opinion. But a lot of funds hold Apple, and it's a very crowded trade, and I would wait for this to come down a little bit, because this is way too high. Even at $360 it's trading right now, it needs to come down a little bit. Okay, so let's jump to the next stock. Is Penn National Gaming. It's a casino operator, and it jumped a lot after CEO showed up with David Portnoy, and David Portnoy is basically like a Twitter personality right now, and he has an army of Twitter followers. I think 1.5 million Twitter followers, and he became a day trader after Barstool was pretty much in a closed mode. That's his company, because of no sports betting. So David Portnoy took on day trading, and has a lot of following, and he's pretty entertaining. You can check out his Twitter, but in general he's very inexperienced, of course, but he's not shy, and claiming that he's better than Warren Buffett sometimes. So, but he is very entertaining, like I said. But Penn National Gaming owns like 36%, I think, of Barstool. So all of them appeared on Mad Money, Jim Cramer's Mad Money, and talked up the stock, and the stock jumped like 17% after that. But it came down since pretty much to the same level where it jumped from. So right now it's trading at like 32.25. It's not a bad buy in my opinion, because the 50-day moving average is crossing the 200-day moving average, and I think it's a pretty interesting buy in my opinion, Penn National in gaming. So on a pullback, I think it's a interesting buy. Okay, so let's move on to banking stocks like JP Morgan. So all the banking stocks are lower this morning, and they're moving lower, breaking through some support lines, which I don't like, because there's a strong support line around, like for JP Morgan was around like $102. Then there's a support line, I think, around below $90. So it looks like the banks are moving lower, and the same thing for Bank of America. Is also breaking through some support lines and moving lower, and another one is Morgan Stanley. It's also moving a little bit lower, but in general, banks are in much better shape than people realize. I mean, they had the inflow of deposits, and I think since March they had 2 trillion more in deposits. So they're floating in money. So central bank Fed is supporting banks through its slew of programs, and I think banks are in much better shape than people realize. And in my opinion, if they come down a lot, like JP Morgan closer to $90 and Bank of America like in 23, even under is a really good buy in my opinion. Okay, so let's move on to airlines actually. Let's move on to, for example, Southwest Airlines. Actually, they're also challenging the support lines like LUV and DAL. They're all challenging these support lines here. I mean, the support lines for DAL, for example, is about $27 and it's opening like around $26 this morning. So let's see what happens if it breaks those support lines. The airlines may go lower, but I mean, there were a lot of bad negative talk about the airlines recently, especially the fact that some states closing the interstate lines pretty much because they require people coming, for example, New Jersey and New York State require people to quarantine for 14 days if they're coming out of state. So that was bad news for airlines, and they were sold off heavily in the last couple of days, and may even go lower. But I mean, we'll see what happens. I mean, if we reopen and the new cases subside, the airlines may jump again. So, but I like in general DAL, LUV. Actually, I like Safe, which is much lower this morning, and I like JetBlue. Okay, these airlines, I think, are in a pretty good place. Airlines like UAL and AAL are a little bit iffy to me. Okay, so let's move on to the next stock, Peloton. So Peloton shares actually gained after recently Cowen analyst lifted its price target to $70 and said its firm is uniquely positioned. And in general, Peloton shares are trading very high to me. It was RSI like 72, but in general, if the pandemic and the whole thing, come down and people come back to work, gyms reopen. I mean, Peloton is going to get hit. So, in my opinion, it's just a bike. Tell the truth, guys. So, in my opinion, it's not no go for me for Peloton, even right now, because it's way too high right now. Okay, so Beyond Meat. So Beyond Meat got its wings clipped a little bit after Starbucks said that it's adding a plant-based breakfast sandwich using Impossible Food sausage, which is another meat imitation company. So that's a little bit of a hit to Beyond Meat, but in general, I think Beyond Meat is still a buy to me. I mean, it's around $150. It's looking pretty good in my opinion. Okay, so speaking of Starbucks. So Starbucks said it's maintained its quarterly dividend, and JP Morgan raised its price target to $78 from $73 and maintained its neutral rating. I think Starbucks, if closer to $70, is a pretty good buy in my opinion. And I think as we reopen, people will rush to stores, to restaurants, and Starbucks will be an obvious winner in my mind. Okay, so Spotify Technologies. Okay, Spot jumped for several days in the last couple of days after Comcast said that music streaming service available on Xfinity. So that's really good news for Spotify, but in general it's trading very high. I mean, RSI is over 80 right now, so it needs to come down for me to buy it because it's a good company, it's a good stock, but it's just way too high in my opinion. Okay, so the next company is Info. IHS Markit. So IHS Markit is the financial information and analytics provider. Reported quarterly profit that beat by 2 cents, but revenue was a bit short, but gave an upbeat guidance. And that's pretty good buy. I mean, in my opinion, it came down for a couple of days, and I think it's in a very good position to for the shares to go higher. Stock symbol INFO. ACN. Accenture. So Accenture actually reported a beat by 5 cents, revenue above estimates. Results were boosted by its growing digital and cloud services. I was very interested in this report because it gives me a temperature on the health of overall consumer IT. Of overall IT demand, and IT demand looks like remains strong, with Accenture reporting excellent results actually. So it's opening higher, and if it comes down a little bit because overall market is opening lower, maybe it's not a bad idea to buy Accenture. ACN. DRI, Darden Restaurants. So Darden is a parent of Olive Garden and other restaurant chains. Reported a loss smaller than expected, with revenue in line, and said it's 91% of its dining rooms now open with limited capacity. Darden, I think, is not a bad idea to buy Darden on a pullback, but if it goes below the 70 line, I would wait for this to come down even lower, like to 65 maybe, before I buy it. DRI. Okay. FDS. FactSet Research Systems. Okay, that's a provider of financial info. Also reported earnings that beat analyst expectations. Revenue a bit shy though, but company said the quarter was very strong despite the challenges. So not a bad idea to buy this fact research. Pretty strong earnings to me, and it's opening higher, but I would let it come down because of the overall market can come down right now. So FDS is an interesting buy, interesting spec buy to me. FDS, MKSC. McCormick and Company. Okay, so McCormick is the maker of spices, condiments, and sauces. Reported a heavy beat by 31 cents. Revenue beat as consumers started to cook more at home, but it's interesting buy to me. Technically, it's in a very strong position. It's trading at around 172, a pre-market of $173. I think it could go higher actually. Okay, so, and I will give you a couple of stocks that virus handling stocks that people ask me about a lot. So like Novia Pharmaceuticals is opening it again very high, and recently it reported new contracts, and it's actually trading extremely high to me, and like with RSI pushing like 85, 86. So at $26 I would let it come down a little bit because it's too high. And I hold shares. I sold cover calls on it actually, but in general at $26 it's dangerous buy to me. Okay, and VIR Biotechnology. VIR is also trading at $49. I mean, like I told you, like for the past 3 months, in Novia and VIR, I was telling you about these stocks for God knows when, how long. So, and these stocks are jumping a lot. I mean, pretty much a lot of people doubling on them, doubling their money on them, and congratulations. But VIR is also opening like around 49, over $49. It's a bit too high to me, and it's pushing, the RSI is pushing an overbought territory. But Moderna, I think Moderna is a better buy out of these three, because it's in pretty good position. It's not overbought, and I think the shares may go higher. And another company is Novavax. Novavax is also pushing higher. With RSI is very high to me, and also needs to come down. So out of these four companies, INO, VIR, and Moderna and Novavax, I think Moderna is the one that I would buy if you want to be in these virus handling stocks. Okay guys, that's it. Don't forget to subscribe to my channel and click the like button, and I'll see you Monday.